If you've got a workplace pension, you've got a problem. We know this because of a recent article under a month ago from the Financial Times, which you admittedly might have missed. Savers let down as workplace pension funds underperform. Let's have a look at this in detail and work out what the problem is. Because you'd think with a workplace pension, surely there's professionals behind it. Surely your employer cares about you. Surely the experts don't underperform. And surely not so when the markets are at all-time highs in the United States, at least. So what the heck is going wrong? And the fundamental problem is that funds like Nest and Legal & General, Aviva, are not delivering. Neither are Zurich Assurance managed bonds. So even the bonds aren't doing it. You've got problems with Aegon, Scottish Equitable. All those names we've all heard of are delivering appalling returns. In this case, minus 14% on over 5 years. Negative. And when I tell you, as I say, the US markets are going all-time highs, it means not only are you having to work longer, whenever you do manage to retire, you're going to have less money than you would have expected. In fact, you're burning money by putting it into those workplace pensions. Now, I'm an advocate for SIPs, self-invested personal pensions, where you do it yourself. At least you get the education to do it. If you don't want to do it yourself, at least educate yourself so you can ask the right questions of your employer. So step number one, ask your employer, what the hell have you invested me in? Is it Standard Life, for instance? Okay, 2% on 5-year returns. 2%. That's Standard Life. Okay, Zurich didn't even bother replying. I bet they didn't. They just want to keep their head down and keep quiet. So what is the answer? What do you do? Well, first of all, you need to collect the information. You need to know what are you invested in through your workplace pension. That's the first place to start. The second place to go is inform yourself, educate yourself about what they've bought and SIPs and how perhaps to do it yourself, whether it's through an index tracker, what are those, whether it is through deciding that actually I won't give it to a fund manager, I will use an exchange traded fund. What are those? Have a look at the free resources I've got, which are actually do include my book for free. Okay, I've got many books, by the way, and reviews from BBC presenters, hedge fund managers, Financial Times columnists as well. You'll see on there 18 books I've written on this. Now, you might not want to read books. I put a whole load of videos on alpeshpatel.com/links. Okay. This was an international bestseller published by the Financial Times, right? So there's a lot of information. You don't have to buy the books. You can download Investing Unplugged for free from alpeshpatel.com/links. Keep an eye on my videos as well, because I want to try and help as many people as possible. I have something called the Campaign for 1 Million to teach 1 million people how to be better investors. I wrote this 20 years ago in my Financial Times column. 20 years ago. Do the right sums to maximize your returns. One of the major problems is we just don't even know the basics. And I've been teaching it in the Financial Times columns, now through videos because the world's moved on. So do like and follow the videos for more, whether on YouTube or TikTok or anywhere else, and I'll continue educating you and informing you. But have a look at alpeshpatel.com/links for a lot of free resources to help you out. Thank you.